Hey remodelers, quick question for you. Are you this close to hitting that next stage of growth? Yeah, you're exactly who we built this for. RA Bootcamp, the Roundtable Readiness Program, is a focused 6-week program that helps you lock in the fundamentals every growing remodeling company needs. It's the bridge between almost ready and Roundtables ready. If you want predictable growth, stronger margins, and a business that truly runs like a business, this is where that shift starts. Join RA Bootcamp and step into Roundtables with momentum.
Welcome to the Why We Build podcast. Join Steve Wheeler and our host, Greg Waller, to explore the world of remodeling, whether you're on the production team, design team, or managing the whole show. You can expect insights, tips, and stories that inspire and educate. So let's dive into the Why We Build podcast.
Welcome back to the Why We Build podcast. If you have any suggestions for a guest or a topic, please reach out and let me know. Now, today's conversation is about something that's every remodeling business talks about, but far fewer actually use the right way. And that's numbers. Not numbers for the sake of a spreadsheet, not numbers that live in accounting software, but numbers that actually help owners and teams make better decisions day by day and week by week. Now, if you've ever felt busy but unsure whether you're really winning, if your pipeline looks so strong, but profitability feels unpredictable, or if the right information isn't getting to the right people at the right time, I think this episode is for you. Now, my guest today is someone who has spent decades helping companies and remodelers turn complexity into clarity and helping owners stop guessing and start leading with confidence. Joining me today is Doug Howard. Doug is a longtime consultant and facilitator with Remodelers Advantage and one of the most trusted strategic minds in our industry. For more than 30 years, Doug has worked alongside owners of growing companies, helping them navigate the challenges that come with growth. Everything from profitability and financing to process improvement and strategic planning. Now, Doug has a unique ability to take complex business concepts and make them practical and usable, often through real-world stories that hit close to home for remodelers. He's spoken at industry events across the country, including IBS, NARI, Remodelers Summit, and today he works with companies across the United States and Canada. Doug is also a graduate of Wharton School of Business, but don't worry, this is not a lecture. This is a conversation about using numbers to make better decisions and create healthier businesses. Doug, welcome to the show.
Thanks, Greg. That was a wonderful introduction, except the years and years and decades and all those things that make me sound like I was 117 years old.
I was trying to make it sound like you were experienced.
No,
I prefer experienced to old.
You nailed it. That was great. Yeah. No, it's all good. All good. Glad to be here.
So how are things going for you? It's early in 2026. What's the outlook for you at the moment?
Yeah, I don't know what it is. I don't know if it's maybe just as a kid watching the ball drop or whatever. I feel such a sense of renewal every New Year's. It's like maybe it's because with accounting, it's like whatever was going wrong, at least that year was closed out. We did accounting for a long time. It's nice to end a year and not have to worry about doing anybody's taxes. I really welcome that, evolution of my career. But, I just think every year we get a fresh start. That profit and loss doesn't say anything bad yet. Hopefully people are finishing their budgets if they haven't already. So we still got a fighting shot. To me, it's like opening day, right? Okay. It's like whatever happened last season, today's opening day. And so I'm excited. This is always an interesting time of year, I think.
So I'm gonna push back a little bit because you are a Boston guy. I don't know if you're still a Boston Red Sox fan, but opening day is always just wait till next year.
Yeah, well, no, it is. Although it was funny, I was in St. Louis for something a couple months ago, and I realized I was in Ballpark Village, about 100 feet from where the Red Sox won the World Series finally. So I made my opening story about the challenges of being a Red Sox fan growing up. And then I'm like, but I said, I feel the electricity in the room because 100 feet from here is where, and the folks from St. Louis weren't excited about that. And
Right.
afterwards, they told me they had a new stadium. I'm like, you guys were so upset you tore the stadium down. But yeah, no, I get you. No, it can mean a lot of things. And it doesn't mean all the problems go away, right? If
Right.
we didn't have enough cash at the end of the year, if we don't have enough work in the pipeline at the end of the year, it's not like, oh, we start fresh and all the problems go away. But there is a little bit of a sense of, okay, what do we got to do this year to make sure that this 12-month period of time, goes really well. And I think, Greg, we saw, I've been saying this for a couple of years now. I think we saw it a little bit in 24. I think we saw it more in 25 after COVID, and then the surge after COVID. Everybody was on such a roller coaster. The last couple of years have been the first years where the strategies, the performance of the company, the owner's capabilities really drove a lot of how things were going to turn out, not just what was going on in the world. So I think 2026 will be what people make of it.
I agree with you. And then actually the lesson I've taken from you is it's whatever the situation is, we just got to get our heads down and move forward. That's all we can do at any given time. So let's talk about the numbers here. Now, we've said before that knowing the numbers isn't necessarily hard, but using them well is where most companies struggle. Why do you think that is?
Well, I think most of it is because a lot of the folks that we work with, they love what they do, right? They followed their passion. They do the kind of work they want to do. Their passion was not doing payroll or spreadsheets or budgets or any of those things. And sometimes it's a little bit of intimidation. Some of it is that some of these companies get pretty complicated pretty quickly. It took me a long time when I first even started working with Remodel Advantage to be able to tell if someone was profitable. If in the month of January, I'm finishing 2 jobs, taking a deposit on a job I haven't started, starting another job, and I have money in my hands, did I make money this month or did I not make money this month? And there's a lot of different ways of looking at that. And so I think it's tough. The power, though, is when people see, like, once they get a good read on that and they can really start to change what they're doing and what their folks are doing, that's when it really becomes interesting. But I think the hard part is for most folks, it's kind of elusive and it's very complicated.
So when you're first sitting down with a consulting client, because you're very important consultant to us here at RA, when you're looking at a new company's financial data, where's the misconception? Are we making money? Are we not making money? How can they see whether or not they are or not?
Yeah, no, it's a great question. So the first thing is, how are they capturing income? Like, what do you call an income? If someone gives you a $100,000 deposit today and you haven't done anything yet, are you calling that income? Or are you putting in an income and you're taking it out when you do your WIP report? Or, what does that look like? And I actually find some people get some of those concepts and then muddle some of them together, right? That they'll actually count what they produced this month and the deposits they got. And it's like, okay, well, that's not the true picture either. So getting clear on what is income. The second thing, and we spend a lot of time on this, what goes into cost of goods? Because if we don't have the right stuff in cost of goods, we're not going to get a true read on what we're doing on those projects. And then getting very clear on overhead and why we have so much overhead. Overhead is one of those things that evolves and people don't really look at it and they don't realize. So I always tell folks, Greg, to me, it's like if you have to make a certain amount of profit and then you have overhead on top of that, so that's the gross profit we need. And then we've got cost of goods on top of that. What we're creating for our team is a hurdle. The higher the hurdle, the harder it is to get over. The more we can compress that overhead, compress that cost of goods by having a better margin, we can have the same level of performance with a lower hurdle. We're going to clear it more often, right? And that's really the key. What do you need to do every single month to clear that hurdle? The other thing is, I think people don't realize that in these remodeling companies, there's really 2 things going on, right? They have a sales organization and they have a factory, right? And so, like, sometimes we'll talk to folks and say, like, okay, imagine you're like a major, your Ford Motor Company. You're building cars and you got car dealerships, right? So, yeah, you got to sell. Yeah, you got to make a profit on what you're selling, but you also have to have enough produced to be able to. And if you produce more than you sell, that's a problem. If you produce way less than you sell, that's a problem. Well, we have these folks now, we go out and they sell and they throw stuff in design, and we got a bunch of stuff in design, and we're forgetting that we only make money when we produce, right? The client doesn't pay us to sell, and they really don't pay us to design. I mean, they may give us a design fee
They should, and we can do another episode about
on
that.
that, right? But the essence of what people are paying us for is the work we do. So when I say to somebody, if you want to be an $8 million company, what does that mean? You have to produce every single month. And then what can sales and production do to keep that engine moving as smoothly as possible? Because if I have a bad sales month, I can make it up next month. If I'm a little backed up in design, I can make that up over a couple months. But if I have 2 months where I grossly underproduce because we don't have enough work, I may not have enough capacity to overproduce in other months to make up for it, right? And so this whole thing becomes about who in the organization needs to know what, so that the people are doing what they're doing, production's moving as much as they're doing. And the crazy thing about this business is the time frame, right? If you are an $8 million company, that means at some point you're going to sell $8 million worth of stuff. You're going to design $8 million worth of stuff. You're going to order $8 million worth of stuff, and you're going to build $8 million worth of stuff. But none of it happens in the same time period, right? And because of that, like different pieces of the business, you can have a great sales year and a lousy production year. So it really just comes down to, we got to simplify this to say, if we know a handful of numbers, and I think it's about 7 or 8 numbers, but I will tell you, when I ask really good business owners those numbers off the top of their heads, they don't know, by and large. And so we're really starting to focus on, no, you need to be able to know that, just like you would know things about construction or sales or anything else.
When we, at our project management intensives or anything, we talk about revenue or an $8 million company, but it's produced revenue. And I think sometimes that gets forgotten. We think, well, our sales team did, $8 million, but production only produced $4 million. You're a $4 million company at that point. And that's exactly what people have to understand. Now, what, the numbers, the 7 numbers or whatever it might be, what numbers are though? Like, what should we be looking at?
Yeah, that's a great question. So this year we came out with a new tool, the Know Your Numbers worksheet. We've started using it with folks, and it's really, I don't know why it took me so long to get it so simple, but it's been really helpful. So it starts with, what do you want your profit to be? So when I ask people, like, what do you want your profit to be for the coming year? I get really a wide array of answers. Some people say more than last year. Some people say 10%, to which I say 10% of what, right? Some people say, so they're all over the place. Sometimes they'll give me a sales goal. But the fact is, there's really 3 or 4 things that we do when we have profit. After we pay taxes, right? We either pay down debt, we build our cash reserves, we take a distribution, or we reinvest in the company. So what we've done with this Know Your Numbers worksheet is we've kind of flipped this thing upside down and said, okay, tell me those 4 things first. How much do you want to improve your cash reserves this year? How much debt do you want to pay down? What are you taking in distributions? How much do you want to reinvest in the company? If that adds up to $200,000, knowing we're going to pay taxes, your net profit number is $250,000, right? That net profit number shouldn't be just a random target. It should be, this is what I need to profit to accomplish the things I want to accomplish. Because when you take those 4 or 5 things and spread them out over 5 years, that's going to determine how much money you have in the bank, how strong the company is, that kind of thing. So once we know what the profit is, then we add to it the overhead. Now, not everybody I talk to knows what their overhead number is. Or they start asking questions like, is that with me in it or not with me in it? My draws or my salary? It's like, you should very clearly know, this is my overhead. What it is a month, what it is a year. If I know my profit, my overhead, I know how much gross profit I need. Great. So how much gross profit percentage are we going for? Now, for some folks, they're really dialed into that. For some folks, it's like, I'm praying for 36%, but I'm getting 31%. And sometimes it's because we have slippage. Sometimes it's because we're not thinking about indirect expenses, right? And so if every month we're putting 5% back into cost of goods because of project management or, workman's comp, and that's a known number, every month you sell 36%, you're going to get 31%, right? And it's not because we're losing money along the way. There are some folks that are really disgruntled with their production team, and it's got nothing to do with that. We couldn't hit that number if we wanted to because we're not doing the math correctly from the get-go. But once we get to that number and say, okay, well, let's say I've got to make $500,000 worth of gross profit, and I'm at a 33% margin. I got to hit 1.5 million in sales, right? So those first four numbers come from just profit, overhead, gross profit percentage. What do I need to get in sales? The next three to me are marketing related. What's your closing ratio, right? Now, I tell people all the time, and they kind of laugh when I say it. If you tell me your closing ratio is about 50%, I can tell you you don't know what your closing ratio is, right? Like I hear that answer all the time, right? But most people will tell you this is like the most critical thing. I mean, I don't know about you, but if I've narrowed my life down to a couple of really critical things, I try to know what they are, right? And it's not hard to calculate. How many proposals did you write? How many said yes, right? I mean, this is like pretty simple stuff. So once we dial that in and say, okay, well, to get that $1.5 million, if I'm doing $50,000 projects or $100,000 projects, I got to do this many, and I'm closing at 33% or 62% or whatever it is. Tells us how many proposals we got to write. Then we got to look at it and say, okay, well, of all the leads we get, how many actually are qualified enough that they get to a proposal? 1 out of 4, 1 out of 6. Okay, this is how many leads I need. And from that, and then we'll usually siphon off, do you expect some referrals? Because everybody will tell me, I get most of my business from referrals. And the fact is, you do the math, it's just not true, right? Or if it is true and they want to grow and they're already getting all the referrals they're going to get, they've got to get something from the other bucket because that's where the growth's going to come from. But when and the funny thing is, we've been doing these worksheets, some people are now taking those last three numbers and taking them to their marketing team, especially if it's an outside marketing company, and saying, hey, I did my profit projection. I need this many leads. I need this many that are going to be qualified, right? But if I know I got to generate this many leads, this percentage has to be qualified. I'm going to close this money. It's going to get me to this level of sales. My gross profit's going to get me to this. My overhead's that. It's going to leave me that much profit. And these are the 4 things I'm going to do with it. We can tell the whole story, and it takes a half hour to do it. Now, everybody should be knowing these numbers. But then they've got to get the numbers, the operating numbers, to the people that really are doing the work. Because at the end of the day, sometimes in a company, only maybe the owner and the accountant know what's going on. And I'm sure you've experienced this. Some project managers are totally dialed into their projects, know the margins, can really easily calculate their cost to complete. Others are getting that information way after the fact when it's ancient history, and they didn't have that at their fingertips when they could have done something about it. So
Yeah.
that's really been the focus for us. It's like, you have got to know those numbers. And it's funny, on the sheet that we use, the numbers are in white, but the factors are in green. Like, for instance, your overhead's in green, your gross profit percentage is in green, your closing percentage is in green. The reason it is, those are things you can impact. I can get sales training, close more sales. I can reduce my overhead by getting more, tight on my expenses. There are things that are just the outcome, but then there are also things that are the actions. And I think we just got to make sure that our folks know what actions are going to drive what outcomes so that they can, make a better outcome for what they want.
So using these numbers for decision making, you talked about the project managers. Some are dialed in, some are not. Some are getting it really as a lead factor. How do we get the right numbers to the right people? What's the strategy behind that?
Well, I think a lot of it comes down to how much involvement they have, right? And so, we've seen over the last couple of years, some companies get really, really good at recognizing that in the pre-construction process, however you define it, having input from production before a customer gets the final price is pretty important, right?
Absolutely.
Before someone's saying, okay, I can't build it for that, which either becomes an excuse on one side or it becomes a missed opportunity to build the customer what we should have on the other side. Also, once I say I can build it for that, I've got a little bit more stake in the game, right? To say, okay, well, we can all make mistakes, but I did think I could do it for that. So I think that's part of it. The other part of it is getting people really dialed in. And, there's different software products out there. And, we have, 3 or 4 that people consistently use amongst our community. But how well they use them and how many people are actually in them to get information out of them varies tremendously over our community. So, if we've got a project management software, a project manager should be able to look at it day by day, not just to put notes in and pictures in, which is part of what they do, but to be able to say, okay, this is what's been spent so far, and we just finished this phase of the job, and were we ahead or behind when we finished that phase of the job?
Right.
You know, because you know how it is. The folks that are dialed into that, they get partway through a job or halfway through a job, and we've lost some ground in a couple of areas. Without cutting quality, there are some things you can do to make up some of that ground. But if you only, I always tell people, it's like, can you imagine watching a football game and just knowing, I wish I had known we were two touchdowns behind at the half. I would have tried harder in the second half, right? Which sounds absurd, right?
Right.
Except that's sometimes what we have people doing. They didn't know they were two touchdowns behind,
Yeah.
right? So they could have done some things or mixed up the crews a little differently or pulled someone over that really knows how to close that piece out or whatever arrows they have in the quiver that they could have used are only usable or they're only going to be, prompted to use them if they know they're actually ahead or behind.
Yeah. I think one of the struggles, even as cool, as great as these softwares are now, they weren't there when I was in the field doing this stuff. It wasn't,
Yeah.
everything was a lag measure. But is defining that source of truth? Is it your financial software or is it your project management software? Now, I think for what the project manager has to deliver, I think whether it's a job trend or builder trend or whatever, I think there's enough information there. Where it gets tricky comes, some of the labor, some of the indirect costs. You might be off a percentage or two, but it's just what is that source of truth? I was talking to someone yesterday, and it was just how do we really answer this question without knowing? Is it QuickBooks or Sage, or is it BT or JT? So trying to figure that out can be tricky.
Yeah. And it's interesting, Greg, because when I had my accounting practice 20 years ago, QuickBooks was really just coming on the scene. My first version of QuickBooks was in DOS, it wasn't even in Windows, honestly. But what we realized really early on was QuickBooks was going to be the standard. So there wasn't really a lot of interfacing to other software back then. So what you did was you got QuickBooks to do things that it was never designed to do.
Right.
So you'd customize an order form that looked like an auto repair, whatever shop sheet, right? Well, that was all fine. And on QuickBooks Desktop could do that, but it got way beyond what it was ever intended to do, which was to basically be a pretty easy to use, not even really accounting, but bookkeeping
Yeah.
software, right? So now when people go like, oh, I hate going from desktop to online, well, yeah, but what we're doing by going from desktop to online is we're getting QuickBooks back to all it was supposed to be, which was the bookkeeping, right? The way you kind of get around what you're talking about, but it takes a lot of work, is you got to put your full reliance on the project management software,
Yep.
right? If you could do it in the project management software or QuickBooks, you got to do it in the project management software and get it over to QuickBooks, because otherwise the project management software never has the full picture. Right?
Yeah.
And then when you're looking at it, it couldn't possibly know where you stand on a job if there's a piece that's only handled when we get to the accounting side. And I think
Yeah.
that's but it's a cultural shift, because that's not what we were doing 10 years ago in this industry. We were squeezing every bit of lifeblood out of QuickBooks Desktop to make it do things it was never intended to do.
Yeah. And despite, again, these awesome softwares having, time cards and stuff built in,
Yeah.
there still is a lag. There still is some stuff missing.
Sure. Yeah.
But, I think it's important. So that brings me to this. So in our tactical groups, which you facilitated as well, some of
Yep.
our production manager meetings, things like that, our production managers, all ranges of folks. Some folks are still wearing tool belts and some are like the CFO of the production department.
Yeah.
But what frustrates me, and I hope there are owners going to hear this, is when our production managers aren't getting the numbers, that it's being hidden from them. How do you combat that sort of thing?
No, it's a great point, and we come across it a lot. There's either a belief that they wouldn't know what to do with it, or they don't have time for it, or that we just don't want to share that information. And it's like, to me, most of our folks hear the raw numbers of the kind of dollars we're bringing in, right? There's no, misunderstanding that these are big ticket items.
Right.
I don't think you can ask somebody to manage a project without giving them the information. And so you've got to push it out to them. Now,
Yeah.
you got to give them some training, and you got to distill it in a way that doesn't overwhelm everybody. So, one of the challenges I find with some of the software products is you can run reports 100 different ways. right? So, but I tell, for every client, it's like, pick which 8 reports you're going to run and how you're going to run them. Because even though you could run it 100 ways for your company, you got to run it the same way every time. But if
Right.
you want folks to really be able to understand it and use it, I always tell people, you've probably heard me say this before, I think the greatest invention in the history of the world is a traffic light, right? It takes thousands and thousands of pieces of data that go into a traffic study and all these other calculations, and it boils it down to, do I go or do I not go? Red, yellow, or green, right? And if I'm coming from one direction, you're coming from the other direction, as long as we have a similar understanding of what that means, we navigate it successfully. So part of the problem is in all of these reports, most of our folks that are actually going to take action need red, yellow, or green. They need to
Hmm.
know I'm ahead or I'm behind. I'm behind in this phase. This is why. But they don't need the volume of information that's produced. And so I think that's one of the challenges. But I wouldn't pay somebody to be a project manager and not give them you'd give them every other tool, right?
Right.
We buy them a nice truck. We make sure they have the right tools. And then the one tool that could make the biggest, determining factor, some people are holding back with, it's like, yeah, that doesn't really help.
Yeah. Yeah. I totally agree with that. Now, you have mentioned before this concept of creating the weather with inside the business.
Yeah.
What are you seeding clouds? What's going on here?
Yeah. Yeah.
The
Well,
foil hat?
it was funny. This actually came from a joke because a long, long time ago, I was in local politics, and I did actually have a citizen call one time and accuse me of controlling the weather, and not. And he said, like, I don't care that you're controlling the weather, but we need more rain, and because we're kind of in an agricultural area where I live, and I'm like, you mean step one is you acknowledge that I'm controlling the weather, right? So that was always kind of a joke, but I tell people, we get into this mindset, especially when things are going, awry around us, is like, I'll just get through it. I'll weather the storm, and we've done a lot of that. And then we come out of that period of time and we say, you know what? No, I'm going to get really good at predicting the weather, not just weathering the storm, but predicting the weather. Is the economy strong? Should I be looking at this market? And we're trying to interpret like what's going to happen. The really successful folks that we have that I think consistently year in and year out find a way to be successful are the ones that say, you know what, it's not enough for me to predict whether this is going to be a good year or not, or if things are going my way or not. It's to say, you know what, regardless of what's going on, I want this many sunny days, right? I'm going to create the conditions that I want. And Greg, we have the benefit, and I tell clients this all the time, we have the benefit of looking at the entire country. We see lots of people in lots of the same markets. And I'm sure you've had this happen, but people call me up and go, you know what? There's no way you can make money in this business in Chicago right now. It's just a terrible market. And I'm immediately thinking of 4 people in my head that are crushing it in Chicago,
Right.
right? It's like every market we have someone and I'm not saying the challenges aren't real. I'm saying the challenges are there to be overcome, right? But in every single market where we have someone struggling, we have somebody else that's just really, so, is really doing well. So I think this notion of what are the circumstances I need to set up? What does my carve out need to be so that we, can consistently be successful? I have way too many folks that will come out like last year, come out of the first quarter and go, it's going to be a bad year. Oh, well, okay, well, then we should just wrap it up now, you know? And then, there are others that say, because it was a bad quarter, this is what I need from the second, third, and fourth quarter. Or, because I'm still a big believer that the biggest way people can impact their companies over a long period of time is continually driving profit margin. When we do 5-year projections, whether it's a half a percentage a year or a percentage point a year, when we increment that over 5 years, it is the single biggest factor in them becoming significantly more profitable. And people think sometimes that's just about raising prices, and it isn't. I mean,
Hmm.
that can be part of it, but it's about how they find trades, how they negotiate, how they use internal labor, how they manage those indirect costs. There's so many things that say, listen, if you can get 1 or 2 percentage points more out of these jobs, right? It makes a big difference when you get into some of the numbers that our folks are getting to. And so that's what we mean. And I think a big part of it starts with the budget. Some people take budgeting very seriously. This year, we really didn't let anybody off the hook with their budget. We like really, really pushed back on every budget. Because sometimes people will say, "I'll say, what's your budget for next year?" $8 million at 30%. No, that's your sales goal. That's not your budget, right? Your budget looks like an entire profit and loss statement.
Hmm.
And then I have people that like, well, I've been working on it for 2 months. Literally, when you sit down and do a budget, it should take 2 hours, no more. And so, but you got to really do it. But at the end of the day, when people aren't really saying, okay, this is what it's going to take for us to be successful, then, they can't be too surprised when, some will end up where they want to be and some will end up not where they want to be.
Right.
You know?
And it goes back to a simple amount of numbers,
Yeah.
right? That's what we're looking at
Yeah.
overall. That's our dashboard. That's our, stoplight, whatever. That's a
Yeah.
good way to know that stuff.
Yeah. Yeah. And,
All
and I
right.
think there are some companies that just consistently make that a priority.
Yep. Agreed. All right. So we're going to jump over some other questions here, a little bit
Yeah.
fun. Let's get to know Doug Howard.
Oh my.
I know you are a huge history buff. If you could have lunch with any historical figure, business, political, or otherwise, who would it be?
It's a great question. I think it would probably at this point be, I mean, I'm going to have to go with a really cliched answer. I think it'd be Lincoln.
Well, I can also see him over your shoulder right now.
Yeah, well, that's maybe I'm feeling the intimidation. Right?
Could be.
Yeah,
Could be.
yeah. And not just for the technical, things that he did, but for the temperament, for the, I just can't think of a situation. And, it's funny, I was listening to a historian say, these times seem so much more turbulent than times in the past, like the Civil War and all that. Yeah, but that all worked itself out. But this feels, and she said, it was Doris Kearns Goodwin, great historian. She said, the only reason why current day feels more turbulent is because we already know how history turned out. But when people were going through it, they didn't know how it was going to turn out.
Right.
And so you think about it, okay, guy gets elected, someone takes a shot at him, half the country splits off. It's like, how do you even not lose, all your perspective? And then how do you come at it in a sense of like, okay, we're going to think this through. We're going to fight for what we think we ought to. And then we're going to embrace bringing it all back together in one form or fashion. You know what I mean? And it's just like, to me, that takes a breadth of thinking that I just think is they say sometimes, God's given us the right people at the right time.
Mm-hmm.
Lincoln when we needed them, Roosevelt when we needed them. I think those are the kinds of people. But to just try to understand, like, okay, when that happened, though, like, what did you actually say to yourself that night? Like did
Right.
you, because there had to be some moments of solitude that were pretty overwhelming. I think of how I react when I can't log on my computer, right? And if I applied that to half the country just seceded,
Yeah.
it's probably a good thing I wasn't in office in 1860.
You said temperament. I think that's a great thing to get out of Lincoln is to
Yeah.
understand. I don't think it was a cliched answer. I think it's a great answer. I'm not sure what you'll say here. I have a feeling, but what book would you recommend that has nothing to do with business or leadership?
Doesn't have anything to do with business or leadership. I don't know. That's a tough one.
Could be the phone book.
Yeah. It's funny because I'm trying to think the last time I read a book that wasn't about business or leadership.
I would have a hard time answering this question as well because I'm looking
Yeah.
at my bookshelves and there's nothing nonfiction on them. There's nothing that's not related to construction or business or.
Yeah. I mean, I don't think this is really about leadership. It was a little bit historical, but there was a great book about Teddy Roosevelt, but it was called The River of Doubt. And it was during some of the dark years in his history when he went down to the Amazon, I think it was.
Yes.
And it's a fascinating book about just him and his psychology and his relationship with his son and, adventure, but also, someone that seemed like he was really like unshakable, but wasn't always that way. I think that was a really cool
All
book.
right. Two more of these. Let's go back to Doug, early Doug, early accounting Doug.
Oh,
What is something, a belief you had about running your business then that you've completely changed your mind about now?
oh, yeah. No, that's an easy one. Discounting.
Discounting. Right
Yeah.
on.
Yeah, no, no. I thought I was so clever with this free service and this free offering and this discounted thing. And I probably gave away $1 million worth of revenue in the 17 years I owned, you know. And I heard someone say the other day, listen, it's fine to give knowledge, it's fine to, but don't be a library, be a bookstore. You
Right.
know what I mean? And so it's like, okay. So I think, and I always thought that somehow discounting here would add value there. Um, and it didn't really translate because it appeals to two different ways of thinking.
Right.
So
The
yeah,
scarcity. Yeah.
yeah,
Yeah, it's the homeowner that says I can get you a lot of work if you do this for cash or you do this for less
yeah.
than, and you never get that work
So
out of it.
my caveat to that, Greg, is one of my favorite questions to ask people when they're trying to tell me about selling value and maybe not getting some jobs they wanted, whether it's them or their salesperson. If you were quoting a job and you knew some other company was quoting a job and the other company was a good company, they're not a schlock
Mhm.
company, and you were 15% higher, why should the customer still go with you? And people really struggle with that question. And they keep going back to the price or they keep going back to like, well, maybe they don't. No, no. If they knew, right? And I assume we're not ripping people off. We are charging this because we offer value. Describe the value to me. I think when
Mhm.
people can internalize that, but it's hard.
Yeah.
And I've had people say to me, like, I hate when you ask that question. And it's like, well, but if I can't ask it and you can't answer it, why would the customer know the answer?
Right.
So anyhow, but I think that was something I was terrible at in the first half of my career.
Yeah. I think even in remodeling, I think most clients think everything's apples to apples.
Yeah,
It's you're getting the same level of, output from every company. And we know it's different. So
yeah.
last fun question, and we'll get into one more, but
Yep.
what's something you're deeply curious about now that might surprise people who know you professionally?
That's interesting. Um, Dinosaurs.
Okay. Is that because of young grandchildren,
Yeah,
or is that because of
one grandchild in particular,
okay?
who he just turned 6 and literally knows everything about every denomination or every, type of dinosaur there is, and will repeatedly ask me, what is that? And what is this? And which one's a carnivore? And when I don't get it correct, he just gives me the eh. And when I described it, like I didn't ask to be on a game show, nor do I really, but and so it's caused me. So for Christmas, he very nicely got me like it wasn't quite the Idiot's Guide to Dinosaurs, but it was like an abbreviated history of what you really need to know about dinosaurs.
Okay.
So I'm slowly getting back up to speed. I knew the big ones like Brontosaurus, Stegosaurus, but much beyond that, it got pretty rough pretty quickly. So
All right. Before we sign off here, Doug, if a listener wanted to take one concrete action this week after hearing what we've talked about, besides ordering the dinosaur book, what would you recommend?
that's a great question. So one of the things that we're actually asking a lot of our clients to do right now is to define for each person what would it take to get an A in the first quarter? Now we have some folks that have really elaborate like employee review processes and
Right.
incentive programs, right? And I sit down with them, Greg, and I say to the person I'm talking to, okay, what if you took a class, a college class, the first thing that the instructor would do would tell you to get an A in this class, it's going to be based on 60% on the final exam, 20% on homework, 10% on class participation, whatever, right? And this is what that looks like. The more we're asking people to ask their folks, or we're doing it with them, for the first quarter of this year, whether you're a salesperson or project manager, what would it take for you to get an A? We're finding there's a really big disconnect in what that expectation is and how to define it. And the people that are just defining 4 or 5 things and agreeing on the measure are already, and it's not even necessarily about the outcome, it's that they're having better conversations, right? So I would ask everybody to stop and ask those key players, ask them to come up with their own. But for you to get an A next quarter, for this to be a good performance, what do you think that looks like? And what do you think I think it looks like? I think there's a huge opportunity there amongst our client base, amongst our members.
And is the answer objective? Like there's a measurable to these things, or is
For
it
the
a
most part,
subjective?
yeah.
Yeah.
But like I had someone that the first person we did it with was a salesperson, right? So you would think if they hit their first quarter numbers, that would be an A performance. So I said, if you hit your first quarter numbers and didn't do any of the other things that were sort of mission critical, where do you think you'd be? Like if you didn't go out and refill the pipeline, if you didn't make connections with the designer or an architect, if you didn't, he said, now that you say that, if I hit my number but didn't do those other things, I think it's probably about 65%. I said, really? Because most people would say, if I hit my number, I hit my number. Don't worry about it, right? As we started asking that question with other things, like, yep, my 2 projects that I finished came in on margin, but did I spend enough time with that project that's in design? Did I go out and find one more trade partner that these ancillary things, people are realizing that just getting the top ticket item done doesn't necessarily constitute an A performance. And it's elicited some really interesting conversations. I'm
That
also
is
finding
interesting.
the business owners and the folks doing the work don't have the same when you can't it's almost like what used to be the newlywed game that has 5 questions over here and 5 questions over here and see if they it's like what are their top 5 things and what should the measure be, what are these top, and they're not the same, and you want to talk about accountability to what,
Right.
right? So I think that's super easy. We've had about 10 companies do it just in the last 2 weeks. And it's really cool to see some of the conversations. And they're coming up with these little scorecards. And very simple. They can still do all the elaborate stuff, all the calculate. But, a really complicated incentive plan that you're going to tell me how I came out a year from now isn't going to drive what I'm going to do on Tuesday.
Right.
I mean, still may be worth having, but it's not going to drive behavior, at least not in the short run. So,
Well, Doug, that's good stuff. Thank you so much for joining us. See you
thanks
next
for
week.
having me.
Where are we
Yeah.
going to be?
Job Trade Connect. We're going to be in Dallas, Texas.
That's right. Looking forward to it.
Yep.
Our A team will be there. Grow team will be there. Be a lot of fun.
Yep. We'll eat some
All right.
barbecue.
Yeah, we'll get some barbecue. All right, Doug. Thanks a lot.
All right. Take care.
As we wrap up today, here's what I keep coming back to. Numbers don't run your business, people do. But the right numbers looked at consistently, shared thoughtfully, and used with intention give people clarity, and clarity changes behavior. If there's one quiet takeaway from today's conversation, it's this. You don't need more data. You need better questions asked sooner with the information you already have. Now, whether you're an owner, production leader, or someone who influences decisions inside or a modeling company, the opportunity is the same. Use your numbers to lead, not to explain what already happened. Again, my thanks to Doug Howard for the insight, the stories, and the perspective. And to you listening, if something from today made you pause, write it down. Pick one number, one habit, one conversation, and start there. Because we don't just build projects, we build teams, we build businesses, and ultimately we build lives. Thank you for listening to the Why We Build podcast, and we'll see you next time.
That's it for this episode of the Why We Build podcast. We hope you found something valuable to take back to your team. If you enjoyed the show, be sure to subscribe and leave a review. Please send in your ideas for future episodes. Thanks for listening, and we'll catch you on the next one. If you want more information about our Roundtables program, production manager groups, design manager groups, consulting services, or any of the Remodelers Advantage offerings, please visit remodelersadvantage.com or email greg@remodelersadvantage.com.